Well, hello everyone and welcome. Great to have you with us. Wonderful to see so many of you join us. We did a little bit of a sound check earlier. We have Francis who says the sun is shining here on the Vancouver Island, so that's great. Snow in Vancouver this year, again, a very strange thing, but that's awesome. So we're ready to go, and we've got a pretty packed program for you today on retirement planning. I hope it'll be of great value to you, and I'm sure it will. And it's wonderful to have so many of you join me here today and trusting me with your valuable time. Thank you for that. My name again is Stan Heller, consultant for VectorVest Canada. I'm delighted you're here, and I intend to make the next 60 minutes or so extremely worthwhile for you. The Canadian market fairly flat again today, but overall we've enjoyed a strong rally year to date, starting really at the end of December from a pretty steep bottom. So this webinar could not be more timely and important. I hope you were one of the many investors like our previous Investing for Retirement students who got back into the market reasonably early in the rally. It certainly gives you a margin of safety to start buying when the market is rising from those historically low bottoming levels. So that's always important, and it's something we do teach in the Investing for Retirement course. And now, of course, we're approaching some historically significant benchmarks with our market timing graph sort of getting closer to the oversold condition, at least temporarily here. So we need to manage the positions we own even more carefully, and we need to be selective about when and what we're going to buy going forward, at least for the time being. So welcome again. Today's webinar is a sneak peek for our Digital Investing for Retirement course that I'm very excited about. We offered this course in November and December as a live workshop, and it was extremely well received. And now we're offering it, it was so popular, we're offering it as a digital course where you'll have the 4 modules that were recorded in November and December, and then live mastery sessions where we really hammer home all the important points of the courses. We review the homework assignments and talk about stock ideas and market timing and all those good things in our mastery sessions. And rest assured, I will be going over today some valuable content right from the course that you can start using right away. And if you like what you see and hear today, I hope you'll sign up for the complete comprehensive course. And later on, I'll have a special bonus offer to tell you about, so I hope you can stick with me to the end. We are recording the webinar, so you will receive a copy probably tomorrow morning, but certainly by the end of day tomorrow at the very latest. So if you have questions or comments, here is the chat box to type your question in here, and just click the send button to get it to me. And this should collapse on you during the webcast, so then you'll click on the orange arrow here to the top left, and that will open the box up again so you can type in your questions. So some questions are already coming in, and I'm just going to flag them for now. And I will try to cover ones that I don't catch during the webcast that don't cover the material. Then we'll make sure we get to those. Tamara is just asking, do the 4 modules cover the entire course that was given in December? It's the 4 modules plus the mastery sessions, Tamara. And mastery sessions, typically they run 60 minutes. With the group that we had and the interest level and the homework assignments, we wound up going about 90 minutes and longer sometimes with our mastery sessions. So we do follow up with each of the 4 modules, and the modules were a little bit longer as well. So that's how that went in November and December. And we've got a few people who took the course, I notice, in the webcast with us today, so they may have a comment or two as we get going through the material, and that's great. Great to have you all with us. All right, well, let's get started because we do have quite a bit of material to go through, and I thought we should begin by defining the biggest retirement fears that most people have. And studies show that people planning for the retirement or living in retirement have really 5 big fears. There may be others, but I'm going to identify at least these 5, and please do feel free to comment or type a big Y for yes if you have any of these fears that we're going to talk about. So number 1 is, first, people are living longer and they are worried they're going to outlive their money. They worry they won't have enough to live well, never mind doing the nice things that they want to do for themselves and others. That might include helping out their children or visiting the grandchildren and helping in that way, or leaving a legacy for their favorite charity, something like that. So outliving your money is a fear for a lot of people. And you can just chat in a big Y if that's something you've thought about, that you just don't want to outlive your money. You've worked hard to create your nest egg, but you don't want to outlive. Yeah, Brett says yes, definitely. So just seeing if anybody else is commenting. Okay, so a few of you say yes, and haven't seen any no's yet. The second fear that a lot of people have is unexpected medical and living expenses. And you might want to pay for medical services, or have to pay for medical services that are not covered by Medicare, or you want more than basic nursing home care coverage, for example, for yourself or a loved one. I'm sure there's a few of you that can relate to that. The crisis has been covered extensively in the media. I'm thinking of W5 and The Passionate Eye here in Canada. It's a real fear that a lot of people have. Working because I have to, not because I want to, is a big fear that people have. It's nice if you can, if you finish up your career and you want to do something completely different. It's great to try out some new things and doing something that you enjoy, or derive pleasure in helping others. It's nice to have that choice. It's not so nice if you have to. If you have to work and you have to be there. Yeah, John says this is very important. Can relate to what we're talking about. Great to have you with us, Dan, from Mississauga, living in Fort Myers. That's awesome. Okay. So another big worry is having no defense against inflation. So you worry about your income not keeping up with inflation. You have no way to bring in more income, so you might be drawing down on your current capital to maintain your lifestyle, or you simply have to change your expectations. And that's not what you want. And then finally, of the big 5, there's market volatility and investment mistakes. And that's a big issue. You know, what if you retired at the beginning of 2008, which is exactly what I did. I retired from a career in healthcare at the beginning of 2008. All I knew is I had created a nice nest egg, and I had VectorVest showing me the way to make money on a regular basis. But it was a pretty big collapse, and if you weren't prepared and you didn't know how to manage your portfolio, that was a big problem. Jerry says yes, that was a big problem, or is a big problem. So that's a big problem. You know, sometimes you can weather these storms. Like we had a pretty big storm here beginning in August with our confirmed down call in VectorVest, and it really accelerated in October and December. And the problem with those big pullbacks or corrections is that you may not have enough time to recover if you suffer big losses. Martin says yes, that's a big worry. So what you really want as you near retirement or you're already retired is a measure of worry-free investing. In this new updated Digital Investing for Retirement course, we cover in depth all the basis of the worry-free investing program. And why is that? Well, Worry-free investing is the safest, surest, and easiest way to make money in the market, especially when we're talking about retirement. The new course does cover much more, with examples and case studies about stock selection, market timing for every stage of investing for retirement, adjusting for extreme market conditions. It was so cool. It was Mike who had sent me an email saying that the module on that included the segment on adjusting for extreme market conditions was worth the cost of the course just on its own. Yeah, Eugene says it's a great retirement hobby, so investing for retirement can be a hobby as well. We show how to use graphs and using graphs to find the best entries and also the best exits. So it's really, really important to do that. Yeah, Paul says it's already really getting hard to buy stocks in this overbought market condition. Paul, I bet you a month ago you wouldn't have been saying that. That was a great time to buy. And I have to say, our students from the previous course were ready. And we'll be show you how to optimize the portfolio manager so that you can get those buy and sell alerts and use the market timing. And there's so much more that we cover in the course. So let's get into it a little bit. I want to cover today 3 steps to retire with peace of mind. So these are 3 key pieces from our Investing for Retirement course, and really the real staples that every retiree should be able to implement, and they make up what we call in our segment or our course the worry-free investing segment of our course. Okay, I'm just going to make a note of your question there, Luke. So let's go through these 3 steps. By doing these 3 steps, you can retire with peace of mind, knowing that you can grow your portfolio, generate income, and protect your capital. When Jim Penna, our retirement manager, asked his clients how they wanted their life to be different 3 to 5 years from now, one of the most common things he heard was that I just want to be able to relax. I don't want anything too special. I just want to live a comfortable life and not have big worries. So what could be holding you back from doing that right now? In other words, what could be the problem? Maybe you could just chat in. What do you think might be the problem? Or what's the problem for you when we talk about retiring with peace of mind? Anything that's sort of driving you here to the workshop today and thinking about your retirement and living that comfortable life. Anything that you're particularly concerned about that we need to make sure we touch on today. Anything at all. The more you participate, the more you'll get out of it. So, Joe is asking what having the amount required to live through a bear market, sort of what is the minimum? Yeah, there's different numbers out there. Whether it's 3,500 or more. Lucine says just continuing to grow my money is a problem. Bob says just having that well-defined trading plan. And Bob, probably having that plan and sticking to it is a real challenge for many investors. Carlene says how to retire without having to outsmart the market at every turn. Yeah, that's a really good point. Having a plan that is tested and proven and works. Francois says being able to continue to make money in a leisurely way, sort of not spending all day at the computer or at a workplace. Kamel says he wants to keep up his globetrotter lifestyle and keep his investment growing on autopilot. Yeah, so true. And Lawrence, not to lose first and then have to grow it back. That's really key. And Lawrence says having that solid trading plan. Yeah, so all of those things. Phil up by Edmonton saying just looking for an improvement on the worry-free investing that he's already using, but just looking for ways to improve. And Valentino says the volatility of the market, that high-speed elevator when going down, how to manage those swings. So we're going to cover some of that. One of the big things I've heard is that your portfolio is going nowhere, and it's a real problem. You're doing a lot of work, but you kind of feel like you're spinning your wheels a bit. It's like every time you make some gains, shortly thereafter your portfolio rolls right back, and sometimes it can be in a deeper hole than where you actually started from. Yeah. Gary says leaving enough money for the kids to start their retirement plan is one of his main objectives and concerns. And Elaine says taking care of your money when you're retired. So really what I'm hearing from all of this is you really don't know what to do when things go wrong. And listen, I know that happened to many investors the last few months, particularly October and December. I got a lot of emails, a lot of concerns, and people just didn't have a proven plan to fall back on for knowing what to do when the market was just waterfalling like we saw. Yeah, so Dan says having a good plan and then tweaking it as we go along would be great. And Kamel says teaching the kids how to make it themselves. That's really important as well. So another problem is if you're spending too much time trying to figure it all out, too much time analyzing and second guessing, then that's a real problem for many investors as well. You need something that's just a little bit easier, a plan that actually works, that's easy to implement and doesn't take too much time. And of course, you feel like if you can't get these things fixed, then you're not going to have enough money. The income stream is kind of rusted shut, and you fear you won't be able to turn it back on. So that's a real problem for many people. So the opportunity, it really doesn't have to be that way. Instead of those issues and all those problems happening, you want to be able to grow your portfolio safely and steadily. You want to know exactly what to do when the market turns against you like it did in October, November, December last year, and even before that. It was a long 5 months, right, for many investors. And again, you need something that just doesn't take a lot of time. If you're working toward, and you're still working and you're planning for retirement, you don't have that much time to devote to your investments. And if you're already retired, then you don't want to have to spend all day looking at the computer and making decisions. You want things to be more or less on autopilot from there. So there's 3 key principles that you need to know about when you're retired so that you can relax and live a comfortable life. So let's dive right into it. Here are the 3 key principles. Number 1 is to play it safe. And particularly as you move closer to retirement, and especially when you are retired, you need to focus on buying safe stocks of companies with consistent and predictable financial performance. That is the number 1 thing that you can do, is emphasize safety first. And our relative safety indicator in VectorVest is the perfect indicator for assessing safety. But we have other tools, other indicators and strategies that are designed to deliver consistent performance, and we take you through them all in the Investing for Retirement course. Our founder, Dr. Bart DeLito, has always taught that good portfolio management starts with buying the right stocks and buying at the right time, but having the right stocks at the right time is key. It's like filling your portfolio with all-stars like the 27 Yankees. And just having those great stocks in your portfolio will help your portfolio grow and do well over time. So let's take a look at how you can find these all-stars. Here's how the worry-free investing model works. We wait for a confirmed up call. Okay, now I'm going to show you in the course some techniques and strategies where you might start stepping in a little bit earlier. I'll show you the historical benchmarks in our market timing graph. But if you're more conservative and your primary goal is to make money safely and not lose money, not lose your estate, you're going to wait for the confirmed up call. And then you'll buy the high relative safety stocks, the ones that are rising in price but have the criteria of the high relative safety. And then when we get into a confirmed down, such as we saw on August 10th in Canada this past year, we want to stop buying stocks. We just don't buy. We start managing our portfolio of stocks that we own. We might manage them a little more tightly, and I'll show you techniques for how to do that and receive alerts so that you can sell in a good time. But we just stop buying stocks. And then we'll sell those stocks when they get a recommendation sell. That's the very last line in the sand of knowing when we absolutely have to sell a stock to avoid risking too much of our portfolio. So that's a real simple concept, and it's a proven strategy and trading plan that works. Dr. Toledo says on page 40 of the little green book, Stock Strategies and Common Sense, everybody gets a copy of that book. Intelligent investment decisions cannot be made without including a knowledge of stock safety. Do not let stock safety be your missing link. So I want to take a few minutes and really dig a little bit deeper into the concept of what high relative safety stocks really are. We can read the definition from our VectorVest stock analysis report. It says consistency and predictability of financial performance are the primary factors in assessing relative safety. So that's how we define it. But really what goes into the definition and what actually goes into the RS indicator in VectorVest. So first of all, each of us needs to know how much money we can afford to lose on any single investment, and we'll give you guidelines during the course on how to determine that. And even though the risk is extremely high, we might be comfortable with buying a lottery ticket, for example, because we can afford the loss. Buying stocks, however, is a lot different. We're using serious money when investing in the market. Money that can make a difference in the way we live, especially in our retirement. So once we've established our tolerance for risk, we can focus on assessing the risks involved with the individual stocks. And good information on stock safety, it's hard to find. Consequently, most investors do little more than plug intuition into their investment decisions. So it really is the missing link in assessing stocks. But it can really make the difference between making you a winner or a loser as an investor. And here are the key factors in the relative safety. We look at earnings consistency, company size, price behavior. How well has the stock rebounded from pullbacks like we saw in October, November, December? How long has the company been in business? Is the company offering a dividend? More established companies with consistent cash flow are able to offer a dividend payment, a reward to share owners, and they increase that dividend on a regular basis. We look at the debt to equity ratio, the sales performance, and other metrics as well. So quite a few things go into it. So that's the number one principle, is safety, safety, safety first. The second key principle, number two, is to get paid. And you need to have a way to generate consistent, safe income. So a lot of investors focus solely on capital appreciation, which definitely can be and should be one source of growing your retirement funds. No question about that. However, while capital appreciation is terrific, if you find yourself constantly drawing down on your capital and not replacing it, eventually you will run out of money. So instead, you need a steady source of income on a monthly basis to pay the bills and do the things that you want to do. So we suggest a good portion of your portfolio should hold those relatively safe companies that also pay dividends. And most important, they are growing their dividends on a regular basis. Once you start collecting nice, safe dividends, you are now starting to generate some additional income. And if your companies are growing their dividends every year, then the income that you generate can stay ahead of inflation through the magic of compounding. So it's like getting a pay raise every year. So let's start with the basics of how dividends work and what you as an investor should pay attention to. Here's the information you can get right from the VectorVest Stock Viewer. Here's what Dr. Lito says about it. The best of all worlds, collecting dividend checks while prices of your stocks go up comes from finding solid growth stocks that pay dividends. VectorVest is ideally suited to find these babies. So here's the information right in our Stock Viewer. We have the annual dividend, the dividend yield, and then we have 3 proprietary indicators that are going to be really valuable to you. The dividend safety on a scale of 0 to 99, how safe is the dividend, which really equates to the relationship of the dividend and the cash flow or the earnings per share. And then the dividend growth, how often is the company growing its dividend and its cash. And then we have a combined indicator called the YSG, or the yield, safety, and growth vector, a very useful indicator to compare one dividend paying company to another. Extremely valuable. So here's an example of Parkland Industries, a very strong dividend payer. You can see the earnings per share is rising here. The dividend is also growing on a regular basis, actually. The dividend is $1.17 currently on an annualized basis. The dividend yield currently is 3.13. So this is the yield has increased when the stock price went down a little bit, even after this slide shot was taken. The dividend safety is 66 on a scale of 0 to 99, so that's very good. And the dividend growth rate is 9% a year. I think we'd all like to get a 9% raise every year. And the YSG, the combined indicator of yield, safety, and growth, is 1.08. So a very strong performer over a long period of time. You can kind of see stock price on a 5-year chart moving up left to right. It's actually about 6 years already, isn't it? And you can see Parkland pays monthly dividends, and they've not missed a payment in the last 6 years. So that can be one stock in your portfolio that's growing its dividend and helps you meet those monthly bills in retirement. Yeah, Elnor says the dividend payout ratio is very important to know if they can continue. And you're right, I do like the dividend payout ratio, but even more important, Elnor, is this dividend safety. Keep in mind the dividend payout ratio is a snapshot in time, just a one-day look at the earnings and the dividend being paid from those earnings, whereas the dividend safety looks at the history of earnings and the dividend payouts to look at that dividend performance over time. So I believe the dividend safety is even more important than the dividend payout ratio. But if you don't have VectorVest, you don't have the dividend safety indicator, the dividend payout ratio can help you for sure. Lauren says, bought some Parkland yesterday. Yep, just got a buy rating from VectorVest, so moving back up. Number 3 principle, and this is a really important one as well, and that is to protect your assets. You want a way to protect your portfolio at times when the market shows those signs of trouble, and we all know what that was like last year. We've just been through it, so I'm sure you know what I'm talking about here. We believe protecting your assets is so important. We cover this topic in both Module 3 and Module 4 of this Digital Investing for Retirement course. And it includes a section on adjusting for extreme market conditions. So we actually go through that in quite a bit of detail on what to do, not just with a normal pullback that comes with a confirmed down call, but what to do when that confirmed down call continues and accelerates as it did in October, November, December last year. What actions you absolutely need to take to protect your portfolio. So here first are just a few basics. We want to be able to weed your portfolio so you'll learn to perform rank analysis and protect your portfolio. When you're investing, the first thing, of course, is to make sure you set a reasonable stop price. If you have a $100,000 account, for example, the most you should lose on a single trade is $1,000. That would be 1% of your overall portfolio. And that's as much risk for a retirement account as VectorVest recommends. In a diversified with 10 positions, for example, a diversified portfolio, you would have no more than $10,000 in any one position. And with a 10% stop loss, the most you could lose is $1,000. And that would be within your 1% risk rule. And then what we teach, though, is once you have a profit, does it make sense to give back too much and have to grow it back all over again? So we do teach the weed your portfolio principle in some pretty great detail. So we actually show that tightening your stops in falling markets can actually grow your portfolio over time. So it kind of helps automate your targets and you get the alerts. Okay? Yeah, you're right, Joe. The 1% would be good. Parkland, Francis, is PKI. It's just simple. All right, so here's some basic rules. Never risk more than 1% of your account size on a single trade. In your watch list and portfolio manager, sort by different column indicators, and we recommend you sort by the relative timing indicator descending because the weakest stocks will be at the bottom of your watch list, and those are the ones you need to pay the most attention to. So sort by RT to bring your weakest performers to the bottom of the list, and then tighten your stops on those stocks when the market is falling and especially when it's accelerating to the downside. So consider locking in profits if price and especially RT are falling. Today, I'm never going to say, that buy and hold isn't something to consider, especially if your dividends are compounding and you've held the stock for 5 years, 10 years. But today, the way the markets are going, and especially after such a long bull market, we need to be a little extra cautious, and we need to consider locking in profits when price and especially RT are falling. So weed your portfolio. Here's an example. This is a real life example from my own retirement portfolio. I held premium brands for a few years and got some good dividend payments, got compounding from it. Price was growing every year, and then it started to run into trouble. And here price fell below the 40-day moving average back in June of 2018. So that was an early warning sign. Now my trading plan called for me to sell on the sell rating, but there were earlier warning signs that maybe, depending on your risk tolerance, you might move a little quicker than I did. For example, price falling below the 40-day moving average. Number 2, relative timing falling below 1. So that would be a stronger warning telling you that, yep, the stock is in a downtrend. So that happened right about here. And then the third warning, that's really the final warning, and that's that sell rating from VectorVest. And that's when I sold. So I did see the stock drop from $120 down to about $102. And that was a pretty big drop. So that may not be suitable for your portfolio, may not suit your risk tolerance, but that was my trading plan, and it stood me well. And the nice part is, when I did get to sell, I sold. What I want to say here is myself and our support team will continue to help you when you have questions or you run into specific problems. We can't offer specific investment advice, but we can explain the VectorVest tools, what you should be looking at, and give you the VectorVest guidance. So here's a question from one of our students a while back. And he said, as a long-time go-easy investor, what the heck happened today to send the stock into such a tailspin after such stellar earnings report? Do you know? Can you explain? I'm bewildered. Hope you don't mind me contacting you. And of course, he wondered what to do now. But here's what happened. Big red candle. Good earnings. The stock actually moved up initially and then just collapsed. And I did reply to that, so we do tend to help our students as much as we can and give them, the VectorVest perspective. So here's what we've learned, the three key principles. So we've learned safety first, play it safe. We've learned that we need to get paid. If we're going to have a strong retirement and be able to do the things we want to do, we've got to be able to cover off our main expenses. Social Security, old age will cover some of those costs, but you really need a dividend income stream to cover the lifestyle things that you really want to have go your way. And you want to make sure you have a method and a trading plan that protects your assets. You just can't afford to suffer major losses like people saw in 2008. 2008 was difficult. People forget, but actually from April till about June, the market was kind of normal. We had that early correction or pullback in January, February, March, and then April going to the end of June was fairly normal. But in October, November, December, it was like a waterfall. And people weren't prepared. And unfortunately, without a plan, people were selling right at the bottom, right at the bottom before the market turned around in March of 2009. And it did take a year or two to recover if you sold at the bottom, but the market turned around. So we want to just show you how to avoid that. So you're asking yourself, well, how can I take my trading to the next level? So you've got some choice. You can go fast or go slow. You can continue on the path you're on and sort of growing your portfolio and then giving a lot of it or all of it back, or you can get in the right lane with the principles and the techniques for investing for retirement and join us for the new course. Without the principles, the tools and techniques we looked at today, you can probably sort of get by running several searches every day and go from there, but it's kind of hit and miss. So we give you some really strong guidance. So it's the Investing for Retirement course. It's a 4-session digital video series. So this is the recordings that we did when we offered the course in November and December. This new course begins on February 25th. Here's sort of the roadmap for success. We focus on a 4-step process, talking about the 5 essential qualities of an income stock, reviewing the stock viewer and how to use the indicators. And then we initially talk about the market timing for each stage of retirement. And then we get into achieving consistent income and growth. And this is actually building your diversified portfolio using the power of relative safety and actually showing you with an example from my own portfolio of the power of compounding. Buying a good relative safety stock and allowing it to grow over time. Into the Unisearch, looking at the very best searches for finding retirement-minded stocks. And then we were showing people how to create a master retirement watch list. And our founder, Dr. Bart DeLito, said, let's put that watch list into the program. And so we've done that. And how good is it? Have any of you looked at the Michael, I'm not sure which sin you were talking about, but he says, bless me, for I have sinned. But here I wanted to show you this retirement folder. So you get all of this. You'll get access to the VectorVest program for those of you that are not with VectorVest currently. You'll get access for 60 days right through the whole entire course, and you'll get something we call the Auto Timer Genius to help you with your portfolio management as well. And if you don't have it, even as a member currently, you will get that. But here's, you can see today we had just a kind of a flat day, but look at all the green in our color guard. So we've had some real buying opportunities. When I go to the stock viewer, these are the top value, safety, timing stocks. But because of the course last November and December, we now have a master retirement watch list, which is updated every week. And it puts some of the best relative safety stocks as well as some of the best growth stocks that may not even pay a dividend. Here they are here. If I slide over, you can see these are some of the dividend yields, but not everyone pays a dividend, but these are growth stocks. And how well have they performed? You can see down in the bottom, the average relative safety is 1.22. Their average relative value, which is the growth of the price and earnings, is 1.21. And value, safety, timing, 1.26. If I right-click on that, these are the kind of stocks we want you in because we want your portfolio overall to grow from left to right. That doesn't mean there won't be pullbacks like we saw here and here. But this wasn't as steep as a lot of portfolios, I guarantee you. And if we go back further, let's just look at a weekly graph and go back 6 years. These are stocks that have continued to perform well, even though there's been pullbacks, of course, and usually they come on these confirmed down calls. This one we powered through. This one we had a little bit of a drawdown, of course. A little bit of a drawdown. This one was pretty steep. But we can weather some of those storms by selling off our weakest positions, raising some cash, and then buying again when we get a confirmed up call. That's the idea behind it. So in the third module, we talk about managing risk. So important. Managing risk, spreading that risk around with diversification and limiting your risk. So we show you those strategies. We show you how to use our graphs in the VectorVest program to identify trend and momentum, the best times to buy, and when you need to consider selling a position and testing your ideas. And then putting it all together with an actual trading plan. So we ask you to put your trading plan together. We have a homework assignment where you share that trading plan, and we talk about it in the mastery session. We have Jim Penna, our manager of retirement services, come in and give us a perspective and the latest strategies on the U.S. market in one of our mastery sessions. So this is a really key part of our program. Yeah, Paul, Paul's comment is just about all the stocks in the master retirement portfolio are currently buy rated. Maybe they are overbought. So are they buys now? We show you how to read the graphs so that we want you buying those stocks fairly early in the trend, and we'll show you how to do that. Great question. So again, it's a 4-session video webcast series. These are the 4 sessions. Begins on February 25th. Here's what Roger up in Edmonton had to say about it. He said, for old hands, it's a great refresher. For new members, it's a really good introduction to the VectorVest system. I was expecting to come away with a generic trading plan for retirement investing. Instead, I ended up with plans that I have developed specifically for my needs. And I think just about all of our students indicated that. Yeah, Pat, the mastery sessions are all part of this program. So on the Monday, you would get the recording of Module 1, and on the Thursday, we would review the homework assignments that have been submitted from that module and do a mastery to really sort of reinforce the lessons learned in Module 1, show examples and case studies. Like I say, usually they're about 60 minutes or supposed to be. We wound up going 90 minutes or a couple of hours with our sessions just because we had such great participation and questions and really strategies from our members as well. So you'll learn to mine the stock viewer for stocks that meet your goals for safety and dividend income, and really do it quickly, not spending a lot of time on it. Focusing on the market conditions that offer the best odds for success. Use the power of VectorVest search engine, the back tester, and the portfolio manager to test your ideas and build a diversified portfolio. Shall we walk you through the steps and how to do all of that? And set up the graphs for the best ways to analyze a retirement stock and determine precise entries as well as identify signs of weaknesses. And I heard from students that the graphing segment was really, really valuable. So, and we do much more. We do talk about the emotional market cycle and how VectorVest market timing graph fits with that cycle and the best times to buy. When a lot of students are sort of capitulating down here at the bottom, we were telling our students to get ready to buy, get your watch list ready. Maybe you're a green light buyer, maybe you're a confirmed call type of buyer, but it's the safest time to buy, not when you should be selling unless a stock is really continuing to fall on you because you're near the bottom and you get ready to be aggressive. So we kind of go through that. And Eunice, who took the course in November and December, said the price of the course will probably pay for itself by getting ready now for the next market call. And we've seen that next market call already. It prepares you for all market conditions and how to manage your portfolio. So again, these are the modules, our 4 steps. We start on the 25th, and it's every Monday at 4:15 Eastern, I believe. Well, actually, the recordings come to you in the morning in digital chalk, and you've got them. And then we get together on the Thursday with our mastery sessions. And here's where we help you implement what you've learned and look at doing what you're doing and guide you. Includes both Canada and the U.S. database. If you don't already have VectorVest, you will get end of day with both Canada and the US. And if you don't have the Genius Auto Timer, because it's part of what we teach in the course, showing you how to reset your stop criteria, tighten your stops during a market pullback or correction, you will get the auto timer for 60 days as well. Yep, you'll have the video, Pat, on Monday morning on the 25th. You get the first video and then the mastery session on Thursday to follow up with that video. And then the next Monday, you get the next one. You've got a few days to review the video, pause, rewind, fast forward, and go through. All right. So there's not about options in this course, but it is all about managing a retirement portfolio. So we don't do options trading in the course, just to respond to somebody there. Okay, so there is an early bird price. It is the $395 US for early bird access to the course. And this expires on February 22nd at 5 o'clock Eastern. However, the regular price is $495, so you could have access to that just before the course. And then elite pricing is $247.50, and you do need to call VectorVest support 1-800-231-0110 to take advantage of that. However, there is a fast action bonus just for a limited time. You can access the entire course, the 4 modules, as well as the 4 mastery sessions, and that's at $295 US. And again, the VectorVest.ca/invest is how you would access that. Let me just type it into the the chat box here for you. VectorVest.ca. So if you missed the course the first time around, this is really going to give you that opportunity to take advantage of it this time. So there is the link that you need to go to access the course registration. It'll take you to this page right here, and you can see the summary of the course, $295 US, when it starts, the modules, what you get, the bonuses, what people are saying about it, all of that, and then you go here to register. So I hope you'll join us for that course. I know you'll get a lot out of it. It's much more detailed than we've gone through today, but I hope you got some good tips today as well that are going to help you right away, whether or not you continue with the whole course. This is sort of the calendar starting on February 25th. You'll get your first recording. We'll talk about it on the 28th of February in the mastery class, and you'll get a recording every week on the Monday. And then the mastery classes are the Thursday after each of the courses. Here's some testimonials from other members. Mike, I know I saw Mike in the chat box earlier. He says, just do it. It will be the best decision you ever make. If you ever take a course, this is the one to take. If you apply yourself and do the work, you should easily be able to enjoy a quality retirement. And he says, thanks to me, I guess, for designing and teaching the course. Fred says, thanks, Stan. Pick up something each time he listens in. That's awesome. And Lawrence, the recordings from the mastery classes, typically they're added to digital chalk either that evening or the very next morning. So then, and then you do have access to all the recordings for an entire year. So it's kind of nice to be able to go back and review on a regular basis. Sue commented on the homework, and I did hear from other students from last time on the homework. They just felt the homework was really one of the best parts of the course, but Sue said it was an excellent course filled with lots of great information and even homework assignments to help you learn more. Fast action bonus, you can take advantage of that, Harry and everyone, by jumping in. I know it's good till at least Friday evening, and I hope to have it available even on Saturday, but we're doing the same presentation on Friday, so we'll have some new people attending as well. And I wanted to make sure that the fast action bonus at $295 was available for them. So you have a bit of time, but I'd love to hear from you if you're going to be jumping in and taking the course with me. I hope you jump in. Kamel, that's a great comment. He's just saying, from February 19th to today, the Master Retirement Watch List made 308%, about 35% a year, 19 winners, 2 losers, which doesn't include the dividends. And he says, wow. So when you combine that with the market timing and the techniques that we're going to show you in the course, I think the potential is just unlimited to what you can do. I mean, it's going to be different for everyone, but you're going to love it. So that is the pricing slide. Just go to VectorVest.ca/invest in your browser, your web browser, and take advantage of that special offer. Yeah, Pat, the Thursday sessions are recorded, and you will actually get a copy sent to you. You're right. I don't think I mentioned that. So you'll get a copy that is sent out to you, and then, of course, it's actually, you know what? I think it's just in digital chalk. So digital chalk is VectorVest's way to house these courses, and as soon as it's available, it goes into digital chalk, so you get it right away. The early bird, Harry, let me go back here. So this is the early bird price. So after sort of Friday for sure, or maybe Saturday, if I can get our people to leave it till Saturday, $395 is the early bird price. So you can take advantage of that, or you can go for $295 if you decide to jump in today. It's a decision you won't regret. I'm the main instructor, I guess. We do have Jim Penna helping out as well. But just rest assured, we are committed to your success. And I think even one of our students commented on that. We are committed. I would recommend this course without any restrictions, a Back to Basics course by Stan, who is clear and devoted to his clients. We'll make it the best course you've ever attended. And he said it was good to see a course aimed specifically at the Canadian market. We do recommend and show the U.S. market for diversification, and Jim Penna does an excellent mastery section on that. But it really is Canadian focused. And Christine said, absolutely, I'd recommend this course. Just do it. This is the best investment you will make in your life. VectorVest is saving my financial future. It gives us information, not just data, teaches us how to make money, and for that I feel empowered and I know I can do this. So I hope you come away with that same feeling, and I expect you will. Kamal, thank you for that very kind comment. He says, you are the best instructor because you understand the reality of Canadian investors. Well, I do focus on the Canadian market. I do invest in the U.S., as many of you do as well. But we're very fortunate in the Canadian market, and we teach this in the course, but we look at the market timing graph. If you're not with VectorVest, wouldn't this confirmed down call have saved you a lot of money and agony and anxiety? And then coming in on the confirmed up, we've had a good run already. If you came in on the green light buyer, you actually got in really close to that bottom, really close. You've got to be careful because there are some false signals, but even buying back here, you could still come in and make some money and then get out in plenty of good time. And then if you look longer at a weekly chart, let's say I go back 6 years and I go back to the confirmed calls, anytime price is above the 65-day moving average and we have these confirmed up signals, it's been a pretty good time to buy. Okay, it's been a pretty good time to buy stocks. MTI above 1, prices rising, pretty good time to buy. And good warnings when the market is headed for a potential collapse. We don't try to predict where the market is going, but VectorVest, with its timing signals that have been kind of perfected over the years, 25 years in business, they give us some pretty good indications. Derek says, if I sign up now, but I'm away at the seminar time, do I still get the recording module? Derek, absolutely. You'll get those modules in something called digital chalk, and you'll have access to them as soon as you're available, and both for the modules and the mastery sessions as well. So I hope you'll join us. Michael says, our own VectorVest translator. Well, it's certainly been a pleasure. I guess I'm one of those guys. I retired in 2008, and teaching for VectorVest is something I love to do since 2011, I think. And I just love to do it. So I think I have learned from my own investing good decisions and also my mistakes along the way. And so I'm always willing to share all of that with all of our members of the VectorVest community. And we've got a great VectorVest community. And Michael says, VectorVest is my investing Bible. That's Michael from Ottawa. That's awesome. Thank you for that. Lawrence says he just signed up and he wants to know when I'm coming to Vancouver. And actually, I've been speaking with our team about that. We've got to get out to Vancouver again soon. Pat, the sessions on Thursday are the 4:15 Eastern Time, so we're consistent about that throughout. Harry, there won't be a Facebook group for this. We haven't gone that far, but again, with our homework assignments, there's a tremendous amount of sharing that that goes on during the course. Absolutely. Yeah, Tom, that's awesome. Tom from Burlington says, I hate to miss any courses, and it's impossible to miss with the new video technology. And he's used it already for two previous courses. And Tom, I think you'll agree, I've done this too. Um, Definitely, the video technology just makes it so valuable when you can go back and review, and anytime you've got a question, very helpful. Yeah, don't worry. We want to get to Ottawa this year as well, and with my wife Corey and the family would be awesome. Stephen, you will get a recording of this program today. So if you missed the early part, you'll definitely get the course. So I hope you're with me. I've seen Lawrence has said he's already signed up. I hope many of you have already done the same. And really awesome if you do. We look forward to seeing you. Take advantage of the special pricing. I think it's a pretty good price for what you're going to get. Because you are going to get some investing guidance that is really going to help you prepare for a lifetime of successful investing. Yeah, Michael says, is Ollie coming too? We do not travel with Ollie. Fortunately, we have family and friends who are quite happy to look after him when we're on the road. Ollie is my cat. And I say my cat, he's the family cat, but really he's my cat. All right. Well, everyone, I hope you enjoyed today and got a lot out of it. We covered the three key principles. I think those were especially important to let everyone know about. We showed you the kinds of stocks and the market timing that is going to help you take advantage of those stocks, get in at the right time, and then weed your portfolio when things get sticky. So how to protect your assets was a big part of that. Getting paid, those dividend payers to supplement the capital gains that I know you'll achieve after this course, and then playing it safe. Using the VectorVest relative safety indicator along with the dividend safety indicator is so important as we near retirement. Thank you, Elaine. I really appreciate that. And Kamel, thank you for that as well, since the PowerPoints are clear and to the point. That's awesome. Michael, thank you for that. It was great to have you with us again as well. So thanks, everyone, for joining me. I hope you consider the course and take advantage of it. We'll look forward to seeing you in the sessions, and really want to wish you a great rest of your week, everyone. Oh, yes. Lauren says, I've met you several times. At the last Vancouver meeting, the user group, you helped me with Canadian Tire. Yeah, awesome. Always glad to help. I think that's something we take pride in. We don't just leave our members and students, especially on their own. Thank you, Warren. Great to hear from you as well. That's awesome. Thanks, everyone. Wish you all the best, and look forward to seeing you hopefully on the course. Thanks again.